Welcome to the May 22nd, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, this video replaces the written commentary portion of our nightly report. And hopefully it offers a nice change of pace as to how we set up our charts, what time frames we use, and what indicators. So let's get to the charts. First up is the NASDAQ Composite, which sold off about 1% today on 12% lighter volume. The NASDAQ is in a pretty strong uptrend above the rising 20-day EMA with only one distribution day, I believe, on board right now. Since it reclaimed the 50, every time it makes a new swing high within a few days, it pulls back below the prior swing high. And so we had another breakout a few weeks ago, rallied for a few days and then pulled back. And so we've had about 2 or 3 days here above the prior swing high. So we can probably expect some weakness in the short term. Now the price action doesn't have to pull back in. If the price holds support of the prior swing high and stays above the 20 EMA for the most part on the hourly chart, it could put in a change of character in that it remains strong and doesn't pull back in. Either way though, the NASDAQ is in a pretty strong uptrend and it's leading the market higher. Up over 27%, I think, from our entry, and is in great shape. No need to do anything right now. Tesla, Thursday closed with a really nice reversal candle. It undercut the lows of the past few days, so anyone who was a weak holder, lacked any conviction in their position, likely was shaken out today. So if the price action can clear this week's high on Friday, that would be a great sign. Amazon closed with a bearish reversal candle on a pickup in volume after a breakout attempt to new highs. And what that means is in the short term, we could see a pullback to the 10 or 20 day moving average. Here is the uptrend line off the lows here, which lines up with the 10-day MA. NVIDIA reported earnings after the close. We're up about 20% from entry around 300, and I believe it's somewhere around 349 in after hours trading, so down about 2 points. And Netflix, like Amazon, a false breakout, which led to a pullback and undercut of the 20-day EMA. As long as the price stays above the 20-day EMA, we're going to continue to hold on to our position. If there is a close below the 20, followed by further weakness, then we'll likely exit. In GLD, we purchased a call rather than buying the ETF. We'd like to see the price hold above this 160, 161 area. But if it breaks below the 158 area, we'll likely sell our option. Before I run through some new setups for the next few days, I'd like to quickly discuss the importance of establishing what time frame you want to operate in. For example, do you want to be a swing trader who takes 15 to 20% gains, or do you want to let a 15 to 20% gain turn into a 40 to 50 or 60% move, or even more? And what style you select might depend on how much time you have available. If you're able to watch the market more during the day, then you might be able to pull off taking profits quickly at 15 to 25% and rotating your money into new positions. However, if you're unable to do that, then holding on to winners and letting them take you out by either breaking a moving average or giving some sort of offensive sell signal, that might be the route to go. There is no right or wrong way to manage a portfolio. It's just whatever you may excel at or what you may be more comfortable with. All right, as for setups over the next few days, keep in mind you should already have a decent amount of long exposure. So unless you're a very short-term trader, putting on 4 to 5 new positions over the next 2 days may not be the best idea if the market follows through on Thursday's weakness. For short-term traders, DXM is extended, but it did undercut the prior low here and closed with the a bit of a reversal candle. So if we can break this downtrend line and Thursday's high, could be good for at least a 10 to 15% move with about a 3% stop. And that would be more of a trade for your quicker short-term swing trader. D-Dog is trading in a pretty tight range after a monster move uh, over the past, say, 11 bars up about 70% or so. 10-day MA is catching up. This looks amazing, very tight here. It might chop around for a few more days and then attempt to break out. Slack, this is work. Pretty nice consolidation here, breakout, and then some chop around that high. And this is a pretty strong stock right now. The clue here is that if Friday's close is close to Thursday, work will have 3 weeks tight just above the highs of the last base in a stock that's basically doubled off the lows. And Tesla, for those not already long, we mentioned earlier that it had a nice reversal candle on Thursday. A move through the high of that reversal candle that holds could lead to higher prices. Twilio is also looking pretty good. Bounced off the 10-day MA after a big volume gap up. Could explode if it can get above the 200 area. We're already long in the Wagner Daily. And another stock that's just about doubled off the lows here is FOLD, which is trading in a tight range the past few days. And if it can get through this week's high, will likely bust through last week's high and could take off. Note the dry up in volume the past few days. Those are a few setups that are possibly in play over the next few days. For those who subscribe to the Wagner Daily, most of these stocks, as well as a handful of others, will be on this Sunday night's weekly watch list. Overall, conditions remain bullish. Thanks for joining me. Have a great weekend, and we'll see you next week.